South Africa-based multinational mobile telecommunications company, one and only MTN, will know next week if its appeal to stop Swaziland's state telecommunications company from rolling out its own wireless cell phone network has been successful. The company operates in 21 countries in Africa and Middle Eastern countries. And of course, the latest news out of MTN. Simon, very well-known, loved company.
Absolutely. Market cap 267 billion. Price earnings 18.6. Dividend yield 3.5. Not cheap, nice dividend. Tshepo, let's come to you first. I think everyone will think MTN, we think South Africa. But I mean, looking at their latest update, out of 141 million subscribers, and 18.8 million, call it 20, call it 14 and a bit percent are in South Africa. You know, Nigeria is sitting on 38 million, Iran on 30. It really is a pan-African company these days.
Yeah, and it has been for a little while. I think this is probably the ultimate African story. And they've done so very impressively and had very strong market penetration. I think what they're starting to find is within each of these regions a bit of cost pressure coming through. They have to cut down in terms of their tariffs and you're looking at a bit of pressure going forward, I think.
I mean, they were first movers, gave them pricing power, and our competition comes in, it gets a little more sticky.
And we're seeing that coming out of not just South Africa, but Nigeria as well in particular. But I guess as opposed to South Africa, the Nigeria region, they're still managing to increase volume, so that might offset that. So I think you're looking at, from a growth strategy, a company that's done really, really well, but I think it's pretty much reflected in the price.
Yeah, well, I mean, you know, MTN has also been under the spotlight time and time again, waiting for a massive deal to happen with either Bharti and other companies as well. Nothing really came through. A lot of question marks as to where the growth from MTN is now going to come from, where the profits are going to emanate from, because we know ARPUs are lower. We keep talking about data, but that also starting to become competitive in Africa in particular.
Well, the growth thesis is around cost containment. It's around kind of muted but continued growth in Nigeria. It's around data. And on the back of that growth and cost containment and decreasing capex, you're going to get increasing free cash flows. That's really the bull case. Also, you know, trades on 5 times EV to EBITDA. Its peer group trades on 6, so there's a re-rating potential for MTN. But, you know, we're not that constructive on MTN. We think it's, you know, unlike what Tshepo was saying, it's quite geared towards Nigeria. 42% of EBITDA comes from Nigeria. EBITDA margins are 65%. So it's, you know, margins are huge there and can only come down through increased competition. Bharti has just moved in there. They are the cheapest providers of cell phone services in the world. And they pass those cost savings on to customers to grow market share.
And they know the volumes game in India. They understand that market.
So we expect a massive price war to happen in Nigeria. And if that happens, EBITDA margins in Nigeria are going to collapse.
And just like what we're seeing in Kenya.
Earnings collapse in MTN.
And exactly, we've seen a price war coming through in Kenya. We know what's happening to
Bharti,
floors
on. You can't go below
absolutely,
levels.
And Safaricom. So is it going to be land of war in the telecom space in Africa, would you say?
I think so. I think you're having these global players recognizing that, as we've been touching on the show, Africa is a growth region. They're looking to go there. The margins that they get in Africa relative to what they're getting from Bharti, as an example, India, are actually quite fat. So they're happily taking that on. And it's a little difficult for MTN in that they're not historically a low margin, high volume player. So that sort of space makes you look back and wonder whether they'll be able to compete in that type of environment.
So hot or not, Tshepo?
At these levels, not hot.
Not hot. You don't own MTN?
No.
Not hot at all. Not hot.
Did you I heard
No.
you. Did you ever hold it?
No, we bought them at 100, we sold them at 120, you know. To not own them when they're such a big part of the index is quite an active position.
Yeah.
Okay, fantastic, Simon.
I like them. They're not hot. I think they're at the price earnings of 18.6, and the dividend's nice. I hold them. I certainly wouldn't be buying more. I'm not a seller. I'm comfortable with my position as is now. I got an early 100, so sitting on some profit. But at this point, I think they're kind of priced to perfection. And as comment, there's some possible rumbles out there.
Okay, fantastic. Moving on to the next stock. Shoprite, a multinational retail company, is also listed on the Namibia Stock Exchange and Lusaka Stock Exchange. The company operates over 1 1,000 stores in 17 African countries, and in India, it makes up to 70% of South African retail trade. Simon.
Shoprite, market cap 54 billion, price earnings 21. Talk about steep PEs, dividend yield 2.3, so you're not getting compensated. Anthony, let's come to you first. I mean, these guys really are one of those companies who's gone into Africa and made it work. They've got 50 million non-South African customers, 162 stores. Unfortunately, what keeps on hurting them is currency. And when they bring that money back into South Africa, it doesn't quite sparkle as much.
Yeah, this management team has performed exceptionally well. Over the last 30 years, they've increased NAV by 30% on a compound annual growth basis. 30% a year for the last 30 years.
So it's a top stock on the JC. There's been nothing better to own.
A massive amount of value has been created for shareholders, and it just shows that if you get your value proposition right and you get your distribution right, the negative working capital cycle can allow you to grow out rapidly, organically, and you get to scale very quickly, and after that, ROEs just shoot the lights out. However,
there's a but.
There's a but here. This company is about to go head-to-head with the biggest retailer in the world.
Who does, I mean, 54 billion compared to Walmart is, I mean, what do they do? What is their revenue? 36 billion rand. Walmart does $1 billion a day.
Yeah.
They do that in a year.
I mean, it's a heavyweight boxer going against a flyweight. It's going to be exceptionally difficult for Shoprite going forward, competing against Walmart. Specifically through the Cambridge brand, we think that margins could halve at Shoprite, and turnover could also halve. So shareholder value could go backwards dramatically. And on top of that, you're paying 21 times earnings. So I mean, this thing's priced for perfection, and yet you've got potentially massive headwinds to come.
Okay, I know that Canon Asset Managers does not hold Shoprite. Little birdie told me.
Not at a 21 PE.
No. But Tshepo, I mean, what my argument was going to be, 1 billion potential consumers, and when I speak to the guys in Lagos, we hear about a gridlock towards Shoprite, people just not having enough space to get in because there's just so much demand for those kind of retailers. Don't you think that there's enough room for Walmart, players such as Walmart and Massmart and Shoprite in Africa? Surely there's enough consumers out there.
The answer is probably theirs. Walmart's not the only player in the States, so there is space for competitors, and Africa is an untapped market, so I would expect Shoprite to do well, and they have historically done well in Africa. But I'd agree with Anthony, it's almost priced for perfection, and there's a tangible reason to have some downside here in terms of a big competitor.
So not hot?
Not hot at all.
Not hot. You don't own Shoprites? Okay.
Nope.
Not hot. Again, exactly like MTN. I own it. I've done incredibly well. I've been lightening my position on it because at 21, you just got to take some money off the table. I think we can see downside in the share price and it becomes attractive.
Okay, we've got a few minutes left for our guest hot stock picks. Tshepo, let's start off with you. And Grindrod is your preferred play?
Yeah.
For Africa exposure.
I was actually dreading talking about it this morning. It was down 1.5%, but it actually rallied very strongly today.
Close 3.5 or 4 today.
Close 6% up.
6,
actually.
okay.
So I'm very happily talking about Grindrod today. I think this is a company that is priced as if it's a shipping business, where in reality we know it isn't. So half of its revenue actually comes from other sources, financial services. So I think
stake in Maputo Harbour and the like.
Yeah. And it's actually, I picked Grindrod keeping with the Africa theme. So you've got a company that believes in Africa growth, specifically the Maputo area, and they've actually locked in their contract there till 2043, I think it is. So we think that provides the company with a very solid base going forward. They've got 50% of their contracts locked in for the year to come. So we think earnings are likely to remain fairly stable. Their last set of earnings were a shocker. But we think if you're looking at this through the cycle, it presents very, very good value. You're getting a very decent yield at good multiples here.
Your preferred hot stock pick?
My pick is a little gem of a company called ISA, which stands for Information Security Architects. Now, this company prevents or provides software and services that prevent the financial services industry from cyber attack. In the context of WikiLeaks and what happened to Sony, where they lost 44 million credit card account holder details, We think that information security is going to be a big growth area. Also, the tailwind of cloud computing, where remote access to companies' IT systems that are now have been moved on into the cloud.
Yeah.
Internet security is going to be
and rather than sell cloud, sell that security around the cloud.
Yeah. So this company has kind of grown, anemically. It trades on 11 times earnings on a 10% dividend yield.
Yeah, they pay out almost everything in dividends. It's contract based.
We think that this company is going to go through a massive growth spurt on the back of this big theme around cloud computing and internet security. So we're really excited about this little gem of a company.
So you're buying at these levels, those out there wanting to take it. Do you think it's a speculative play, or do you think that the fundamentals are pretty much intact?
It's a value play at the moment, with a growth or the potential re-rating from a growth story.
Yeah.
It's also one of Keith McLachlan's favourite stocks, and it's also a stock which he again put on my radar, and I've been looking at the last couple of days. Looks really, really good.
And your hot stock pick for Africa exposure, Simon?
I'm going with the SBAEI, the Standard Bank Index. There's some issues around price, but if I'm not allocating boots and all that.
This is a shorter acronym,
the
I would
say. 3 to 5 year view. We can play through those costs. It's going to give me some nice Africa exposure. There's bunches of other ways of doing it, but I like just getting some. I get some safari.
And would you say that Grindrod is hot or not?
I like Grindrod. I mean, it's a brave play. I've been watching some chaps out there today discussing over the last few days. A lot of them bailing it, but Canon, I like their strategy. I like their way. Wow.